Recording in progress.
Hi guys, how's it going? Bouchon, that sounds like a new name. Great, great, great. From New York, great. It's not too bad for you, is it? How's it going, George? Yep. Thanks very much, Nate, and welcome everybody. Thanks for joining us again. A lot of familiar names keep on coming. That's really cool. So I hope you guys are learning some stuff here and getting some benefit out of the analysis side of things. I'm actually going to disappear off camera for today. I'll come back a little bit later. But before I start with the analysis, just a quick reminder, all the information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade future stocks, options, or Forex. Right. So CPI numbers came and it's gone already. We can see here, and this is since Monday's session when I left you guys a day in between, obviously. Price sort of moved up and then yet again respected this upper median line that's been sloping to the downside here. Now, those of you guys that's been following me for a while know that I also incorporate a bit of market geometry, and obviously, very importantly, I look at these levels to lock, which to those that are new yet today, I'll explain what these levels are in just a moment. But just quickly want to get over what happened with the CPI data. Now, I did mention that if it's going to show a bit of an increase in inflation, that we're potentially going to see another downturn. Prior to that, actually, news release or the number release price moved higher again, retested this median line like it's done so many times, and it's just amazing to see how price continuously respects this downward sloping angle for a very long time, since basically back here in the beginning of Feb, using these three anchor points over here. Now, you probably also noticed that I already switched my expiry dates on the ES, on the NQYM, I think gold and crude oil as well. It's crude oil is actually the same one still, yeah. Just because that's a rollover, I think on Friday. So I think a lot of the volume is already in the next month. So I've already switched over to that. So, all right. Again, we're going to be looking at the ES, NQ, the YM, Russell, gold, and crude oil as always. Again, if you're new to these sessions, I'm going to be referencing a lot of these levels over here. These blue ones to the top here, and you got this little orange one here, and these red ones to the bottom are your normal pivot points, which is available to anyone in the on the Ninjacators platform. And then also very importantly, we have these lines. I hope you can see that, or I should actually color them something else. These little dashed lines, horizontal dashed lines, which are called our projected range lines, and it's a proprietary indicator here from Ninjacators, and we basically it's used to see where price might move towards, similar to your pivot points, and also where support and resistance might step in. Now these levels are calculated using the previous day's volatility, and they really do work really well, especially if you look a little bit back at these, still some remnants of previous trading sessions here. We can see how beautiful price hits these levels and when they react support and resistance to a very high degree, which is pretty amazing to see. Anyway, not just using these levels on their own, I'm using them in combination with market geometry. I also want to know what price structure is doing. And then again, when that levels to lock newsletter is going to actually be ready, then prior to market open or stock market open, when most of you guys are getting ready for the day, that newsletter will already be ready with all these levels to lock contained in that. And then I'll give a sort of a game plan where I believe markets would move towards and mention these levels to lock. Again, also I will mention in that newsletter some of these median lines on the pitchforks. And especially when you get areas where you have a bit of a confluence, like in this blue line over here, where you've got a projected range low and also a low median line or center median line, this green line sloping to the downside, is sort of an area where you would expect support to step in, for example. Again, so a lot of these levels that I'm going to reference might not make much sense until that newsletter is out, but really trying to also just give you a bit of a bigger overview of what I'm thinking is happening with the markets here. So just a quick recap here on the ES. And this was in the beginning of March. And I think we had Tony on board, one of our guest speakers here. We were actually looking at an area from my own analysis, and he uses completely different indicators and stuff from his side. But you also had a sort of a zone around the same area where we expected the resistance to step in. And this is just a beautiful example where I use a pitchfork to track this upward move. And we also had this pitchfork obviously been sloping downwards since the beginning of Feb. Now, where those two cross is exactly where price reached a high and reverse lower from. Now, at that stage, we thought we're only going to deal with a correction, i.e. that it might just do something like this, correct lower, and then go back upwards again. And obviously, that didn't happen. Price came down pretty strongly. Obviously, a very significant high. This was, again, at confluence of market geometry levels. We also had some of our projected ranges there. I think at that stage, we also had an R1 or R2 there on the pivot points. And then this whole thing with the SVB bank and all that came out as well. And the markets just, start selling off pretty strongly again. So ES making new lows, came excruciatingly close to breaking these lows that were set in December last year. So I think that could still be on the cards that the ES would break those lows. If I just had to look at this decline here from that area of confluence, then it does look like we potentially have a 1, 2, 3, 4, 5 for a wave 1, a beautiful ABC for a wave 2, and then this was either a 3 expanded flat 4, and that we're now potentially going to see another move lower to break these lows that were set on the 13th. All right, so that was what? Monday. So yeah, very interesting to see. I think ES same with the NQ, although the NQ is a little bit stronger, and actually it's not trading that close to these lows set on, when was this? On Monday, compared to what the ES has done. So in the bigger picture, I think ES is still heading lower. If this leg lower completes, maybe then get a bigger bounce back to the upside again. But anyway, that's sort of a bit of a forecast. Again, price already had a significant move to the downside during the overnight session, leading into today's profits at noon, and already breaking S1 at 3,902.50, and no issues reaching projected range low, which is now at 3,000, what's it, 876 plus minus. So that's something that you can look forward to in the newsletter. I quite often look at overnight highs and lows. If those areas get broken, look at very specific time frames, and then give sort of an idea, obviously looking at what the bigger picture is telling me, whether I'm going to be bullish or bearish, and then, you know, give these ranges that you'll have prior to the actual trading session. Again, that newsletter should be ready pretty soon, but I'm not making any promises anymore. There's been some technical issues there, so hopefully that will be ready very soon. Obviously, we'll let you guys know during the sessions when that will be ready to go. All right, so that's on the ES, expecting some more lower prices here. But just one thing before I go to the NQ, we also look at playing intraday moves using the projected ranges, as well as these S1s and S2s, both on the bullish and the bearish side. So I might give what I would call like sort of a bigger trend, what I think the bigger trend is, and what it might be over the near term or the medium term for each of these markets, as well as then a game plan for the day. Right, so yeah, again, we just have to wait and see when that newsletter will be ready. Unfortunately, not ready just yet. On the NQ, like I said, where the ES is already trading down here, obviously different markets. It's just not been as weak as the ES thus far. Price sort of during overnight session tested the pivot point at 12,241, broke below it and reached S1 at 12,126. So again, this could also just be corrective in nature. Obviously, a little bit of a different pattern than on the ES, but also thinking that the NQ could potentially move lower. Right, YM, obviously weaker out of those other two, already breaking Monday's lows. A very strong drop down in the Dow. We've already seen S1 taken out 32,096, projected range low reached at 31,850, and S2 also being breached at 31,807. So if there's still any sort of space left for today for the YM to move lower, then I'll say that the projected range low deviation could act as support and potentially a target at 33,649, which is not too far off from where price is currently hovering. Right, and then we have the Russell, similar, also very weak, also took out these previous lows. Price also opened a little bit above the pivot point at 1,790. No issue reaching S1. Already took out projected range low at, was it 1,742? Came within a fraction of S2 at 1,729. So again, guys, for the indices in the bigger picture, still think the ES could still move lower. And again, maybe tomorrow we can also look at where price is trading in relation to these levels, and where potentially that sort of, let's say, final fifth wave could appear before we potentially, and I'm saying potentially because nothing is certain, get a correction. All right, maybe up again, or maybe this is a new low, whatever the case might be. So in the near term, I'm still a bit bearish. Obviously, it can be proven wrong. So yeah, I'm just got to look where price is going to go over the next few days, if price structure changes, etc., etc. All right, that brings us to gold, which is obviously enjoying one hell of a move to the upside. We also here had a pitchfork slope to the downside, and price has sort of been breaking above and below these median lines and since broken out of the confines of this downward sloping pitchfork. So what I'm going to do here is actually get rid of that And I've now got another pitchfork using the three most prominent anchor points prior to the strong move to the upside. And you can already see that price, obviously, no issue breaking the pivot point 1,999 today. Already took our projected range high as well as R1. The previous candle sort of closed by R2 and a projected high deviation. And now what's in its way here is this upper red warning line, which is quite often where you get end of moves. I'm starting to think that this one hell of a move to the upside, potentially a start of a massive new trend to the upside. But again, won't get too far ahead of myself, but potentially expecting a resistance to step in here. Price could easily still go to the projected high deviation at 1,942.9, maybe give us some sort of a wick. So we really got to also not just, try to trade these areas. We want to see some sort of reaction. In our case, maybe a reversal candlestick turning red or whatever the case might be. But whatever is happening over here, potentially a fifth wave, potentially corrective. And I think if we do correct, I just want to get rid of that. Sorry, snap mode. It's on at the moment. And we potentially have a 1, a 2, a 3, a 4, a 5 with a correction lower. So we've got to keep look out for prices currently trading pretty much towards the projected high deviation at 1,942. Again, we'll recap things tomorrow, see how prices reacted because it's already reached these levels. If we do get a reversal candlestick, like I said, then I'm going to treat whatever is going to happen afterwards potentially corrective. And then we'll also during the next sessions then give targets to the downside. Right, crude oil, very weak. For those who've been following my work for a while, the analysis, we were tracking what we thought was a double zigzag. We did get a double zigzag finish, and at that stage, I think it was a Monday, price moved strongly to the downside. I thought that was the end of it. And as Murphy's Law, the markets would have it again. We made another three-wave move to the upside, giving us what I believe was a YX or triple zigzag formation. And again, we were looking at an area here. We also had confluence in our projected range highs. I think it was what was it, an R1 or something that we had on that day. Price reached it to the T and since then collapsed to the downside. So still very bearish on crude oil. I mean, you can already see how it's been taking pretty hard knock and a bit of a hiding. So still bearish on crude oil for the time being. I mean, price already reached the projected low deviation at 66.98. So that's been a significant move that we've seen already in crude oil. It's really, really moving fast and very volatile. Now, before I actually go over to talk about the volume spread scalper today, I just want to just give you an update of what I've shown you last week on crude oil. And although I potentially was wrong about the descending triangle here, we've had the situation on a longer time frame. I'm looking at a daily on crude oil, and I've had this pitchfork on my chart for ages now, that where price has been sort of finding support at this lower median line on one occasion, two occasions, three occasions. It moves slightly higher, and then we have a crash down to the downside. So if we do get any sort of a bounce back upwards, then quite often these median lines, in this case, which acted as support, might now act as resistance. So wherever the target might be, price might actually reach 63.27, whether that's going to happen soon, tomorrow, or next week, remains to be seen. But any sort of reversal to the upside, and then we'll track this on a 4-hour time frame, I'll treat as corrective. Make note of where this line would be at that day, because it's sloping downwards. Obviously, that price will decrease as time passes. But then see if that also overlaps with one of our projected ranges or our levels to lock, and see if that might actually act as resistance this time around and then drive crude oil lower again. So yeah, pretty volatile times, pretty crazy times, a lot of things happening. So yeah, just stay safe out there. If you are trading, then make sure that obviously you're managing your risk properly and so forth. All right, so that pretty much concludes the analysis side with the levels to lock that I've had on here. So the next thing I'll bring up is the volume spread scalper. We've actually had one of you guys, I don't know if you're in the room today, I can't remember who it was, asked me to do a product spotlight on the volume spread scalper. I believe you probably have the volume spread scalper, so maybe you just want to see how I use it. Also recently done a 4-video trade on demand videos. It's in the member area. If you do decide to take this or to go for this package, and they are basically traded from a 1-minute time frame. I think I did 4 or 5 videos. I can't really remember, but sorry, I'm just looking at the message. No, it's not a message. Anyway, so that's available in the members area. And what's really important for me, although this is a really cool package, is that not just what the indicators are showing, and I'll obviously talk about all of these indicators that comes with the entire suite, but it's very important for me also how I get into trades and then manage my trades as well. So a lot of traders always talk about, you know, taking a signal, getting into a trade, etc., but very little talk about actually where to place your stop loss, targets, how to manage open positions, how to trial your stops, etc. So what I'm going to do now is go through all of that, but first let's do a little bit of a talk of what the volume spread scalper is. And there's quite a few components included in this tool suite. Let me just get this floating toolbar out of the way a little bit here. Yeah, it's a little bit stuck there anyway. All right, so that's a bit better. So you'll see a young crude oil. I've actually had a setup here yesterday. There's been quite a few, obviously, but I'm just for explanation purposes going to show you what the tool does, why it does that, what I look for in my trades, and then also quickly discuss my trade management. So first things first, the volume spread scalper is actually an analyzer in itself, and it analyzes the relationship between volume and price for each single bar, and obviously for whatever time frame that you've set that for. And then it provides these signals. You see it's got this little green block here for a buy signal. And then it also gives these lines here when it identifies an imbalance in volume spreads. All right, so if you see a green bar, it tells you it, or green box, should I say, it tells you that there's a potential bullish setup or bullish signal that's going to take place. And this 22 at the bottom of that block there basically just tells you what the range of this actual setup candle is. So in this case, it was 22 ticks in crude oil. All right, so obviously 22 ticks, that'll be $220 per contract. Crude oil moves $10 per tick. And then obviously you'll know what markets you're trading. This also works on the micros as well. But in any case, it's a really nice example here of what it is I'll typically look for. So these lines here are actually the actual volume spread scalper. All right. It will also give you red boxes in scenarios where it's got a bearish setup or showing a potential bearish setup. And basically, that's all the volume spread scalper does. And it's got this little button on the left here, it says VSS. And you can then go and take these lines off. Oh, now it's recalculating. I should not have done that. But let's just quickly wait for that to load. There's been a recent update, a pretty major update, where they've also included the volume delta histogram. I'll be talking about that very soon, as well as the smart volume indicator. There it's back again. And now it's going to go away again when I actually push that on again. Let's just give it a little second. Sorry about that. Now, previously, during the previous updates, I'm going over this because it's quite important before I actually look at the other tools that's included in the suite, is that the volume delta histogram only started plotting when you connected to your data feed. Meaning that, let's say you stepped into your office, or it could be at home, or whatever the case might be, and you connect to your data feed. And here we go, back again. Sorry about that delay. The volume delta histogram at the bottom here would only then start plotting from the time that you've connected your data, which was something that we didn't really like. I think also something that wasn't very useful, because all of these indicators all look at volume in some sort of way, right? Again, I'll talk about what they actually look at here. And this is obviously in conjunction with the volume spread scalper. These buy lines, buy levels, stop loss levels, and as well as these boxes it gives you with the candles range, the setup range. So again, so the reason why it's been taking this long to load now is there was a workaround here that we actually could load historical tick data. And there's a way to do that. Again, I also give instructions in those on-demand videos. If you do become a member, that should be available online already in the members area. And it's just a bit more data intensive. And this is, but what it would do is populate the historical volume delta histograms for you. So it basically paints you a bigger picture of what's happening to volume, or what happened to volume prior to you actually connecting your data feed, if that makes sense. All right, so now quickly, again, the volume delta histogram, and this is the cool thing about volume. Volume tells a story, but for me personally, I need to look at various indicators. And this is obviously why we also have these included. And they all sort of tell you a similar story. It's almost like building a case as to whether you should take a trade or not, if that makes sense. So your volume delta is basically displays the net volume up or down, or the buyers versus the sellers, so that you know who's in control of the markets. And this basically gives you these histograms, green for the buyers for each candle, and red for the sellers for each candle as well. And what's really cool here, if you use this in conjunction with these signals, I do not trade any signal, or sorry, every signal that I see using the volume spread scalper. There needs to be certain conditions met. And again, I have to also look at volume delta. And this is a great example of where, for example, have crude oil moving up into a high, and then you get a correction. And you can see even during this correction that the volume delta, or the buying side on the volume delta, although it started off pretty strongly with this candle to the downside, there's still a lot of buyers trying to push this up, up, up. So if you look at this time frame over here, into this low, right over here, and we compare, oh, sorry about that. Compare the volume on the volume delta. And you can clearly see that although price moved lower, that the buyer side were trying to basically hold us up the whole time. So the sellers eventually took over here, but visually seeing there's way more green bars than there is red bars during this move to the downside. Now, there was one over here where there was actually a setup. Price ticked actually above buy line and then reversed lower again. If you took that, there would have been a loss. Now, not every trade is going to be a winner, right? But what's cool here, as price moved lower, the buyers were still in control. And as it got into this low over here, I'll talk about the smart volume in just a moment. Price ran a little bit sideways and again gave us this buy signal here, 22 tick range setup candle, and you can already start seeing that there was a lot of volume coming back in on the buyer side. And that's typically what I would like to see, especially if I'm thinking I'm dealing with a correction. So you can look at the overall, let's say, trend for the day, and let's say it's been up and you get some sort of a correction. This is one of the conditions that I look for. Let's say in this case, price trending upwards. If we get a move lower, I'll assume that it's a correction. You won't always obviously know. There could be a change in trend, but also just reading what the volume is telling you as a story. It's telling you the buyers are still there. The sellers temporarily took over. But as soon as that setup happened here, obviously an imbalance that the volume spread scalp is seen on that candle. We've had during this entire climb a lot of buyers still interested, and all of a sudden they start basically getting involved again. So beautiful, beautiful sort of reading that I want to see from the volume delta histogram. And then we have the smart volume. I'll then go ahead and talk about my actual entries here. Now, the smart volume, what that does is basically it helps confirm your trend, or the strength of your trends and warnings of potential reversals. So you'll see that it's got these high spikes in volume, and then also has sort of these blue ones, and these are basically lower areas of volume. Now, there's a few ways that you can reach smart volume. Quite often when you get into, let's say, a high or low, you get these hell of spikes. We call blow-off tops or blow-off bottoms, where basically either a lot of traders, or we say big traders with deep pockets or whatever the case might be, might start offloading their positions, because you can't really tell what everyone's doing there, but it's sort of an occurrence that regularly appears if you look at smart volume, these high spikes. So they're either like getting out of positions or building into positions, if that makes sense. So a lot of these green bars over here has been towering above this entire sort of area leading into this decline over here. Price actually made a low where it pipped these previous lows, and you could probably see all of these high towers here as either them loading onto, or a lot of traders loading onto positions, or traders actually getting out of positions. In this case, with this volume that's still been high, with this the smart volume making these high peaks, there's all sort of a bit of a sign that we could potentially see a reversal or continuation of that uptrend, if that makes sense. All right, so that's pretty much how I read volume. And again, not just going to take these signals and trade them on a whim. I really need to read into. And I do recommend you do the same if you try to trade with volume. You look at various indicators, and if they all start telling you a story, then it gives you sort of a bit more of that confidence to take a trade or not. The other thing is, obviously, there's other examples as well. You quite often get, for example, where you see where's a good example of this? You can look at volume divergence as well, just as you would on a MACD. I do discuss that in that video. That's when you have, let's say, for example, two consecutive, let's say, lows. It's very close to each other, where the first low made a lot of volume. I can't show you that now in this example, but something else I look at, and then you see another low. Just put that low, but on lesser volume, and you can actually see that here. Makes a low, small move up, just pips that on lower volume. So you got a bit of volume divergence here as well. And then an increase in volume during that setup bar from that low, together with the signal from the volume spread scalper indicator, these lines over here, and obviously also looking at what the smart volume has been telling us, that we're going to start seeing a lot of volume activity during this low over here, and then price moved back to the upside. Now, there's also something else that we worked into this software, or this new update, which I believe is already available for the members, is our position volume profile. Now, I'll quickly discuss that in a while, but let's quickly just go through the way that I would then trade a trade here. So once all of these conditions sort of met my, I'm going to say met my liking, I would rather say it's been telling me a story. I would say that this is a high confidence entry for me. Now, this is 22 ticks on crude oil. Now, I've also built, well, no, I won't say built. I've just got a very, very simplistic ATM strategy where I trade two contracts, and I like looking at the crude, ES, gold, etc., etc. And we also have a scanner that comes with the software. We basically load all the markets that you want, and the volume spread scanner will then tell you if there's a signal and give you an audible and visual alert as to when that signal's taken place. Right? So you don't have to go scour through your charts or flip between your charts all the time. In any case, getting back to the actual setup here. So what I quite like doing, and I'll just use horizontal lines and my measuring tool here. I use an ATM strategy trading two contracts. Now, you got to be careful. If you've got a candle of 22 ticks, like I mentioned, that's $220 per contract. Now, with the strategy I follow, I have to trade two contracts or multiples of it. So if I take two contracts, I'm actually almost taking a risk of about $440. Actually, I'm going to take a little bit more than that. So that's quite substantial, something I can handle on my account. But, you know, when you get situations like this, where you're getting these big ranges, especially when things are volatile, you might want to go to a shorter time frame, like a 1 minute. Again, the volume spread scalper is a scalping system. It can be used in higher time frames, but obviously with scalping, you don't want to be in the markets for too long. But you can then trade micro contracts or the mini contract in crude oil on QM, I think it is that a symbol for there. Anyway, I'm just talking too much here. Let's quickly talk about the actual entry. So once an actual entry candle signals appear, whether I see that on my chart or from an alert from the volume spread scanner, I'll then go ahead and manually place a buy order one tick above this area here, the buy level, which is 73.06. So I will go to 73.07. I actually got to blow up this chart a little bit. Maybe let's make this a little bit smaller so you can see what's going on here. So I'll put a buy order there. You'll see that there was enough time in this situation. Price closed sort of in the middle of the range between this upper buy level and the stop loss level, and then started moving up. So I'll go a tick above with my buy order. Once I get filled, my ATM strategy will automatically, at a set distance, give me two stop losses. Well, stop loss, one level stop loss, but for two contracts, and it will just place it somewhere. All right. But what I'll have to do then is manually drag that stop loss according to where the stop loss level is. But in this case, I don't go on the line. I've seen many times how price actually bounces between this actual candle of where the volume imbalance took place. So I actually normally take it a little bit of a tick below. So let's say 72.83 in this case. All right. So actually taking on a risk of 24 ticks here and not 22. So just that's how I do it, guys. You can obviously do it the way you want to. But so two contract stop loss will be here. And then what the ATM strategy does will at set distances on to the top, just distances I suck up my finger, place a first target and a separate second target above the market. All right. But these I also have to go manage myself. So what I'll do immediately, once I get filled, is measure the distance, and we know this is 24 ticks. I'm just showing you this manually that I'm taking 24 ticks of risk. And I'll go from my enter order, in this case in a bullish scenario, and measure where 24 ticks is to the upside. So 1-to-1 distance from entry to where my stop loss was. All right. And then I'll have normally I'll drag this to a 3-to-1. I think what's 24 times 3? Is that 72, I think? Something like that. 72 ticks. Yeah. So that's where my secondary target will be. But then I also have what I call a trade management level, because I'm obviously manually managing this trade. I'm doing it in a very systematic way that I pretty much do for most of my trades, especially if I do, if I scalp, if that's what I wanted to say. So we got a first target at 24 ticks. And then what I like to do is have a trade management level, and I'll explain what that is in a while, at 1.5 times the distance. In this case would be 36, so 24 times 1.5. I want to put another line in there. So I'm sorry I've got so many lines on. Maybe I must color this for you guys. Let's make this one red, meaning that that's my stop loss. So you can visually see a bit better what I'm doing here. Let's say that one was my buy order and where I got filled. Let's make that green. Let's make it spring green. Then I'll have a T1, target one at 24. Sorry, it's taking a little while, guys, but I really wanted to show you how I manage things as well. Really put a lot of emphasis on trade management as well. Then I've got that management level. I'll leave that at that color. And that's my other card target over there. Properties. That's my secondary target. Let's color that. All right. So once I got filled into a candle or into a trade, let's say right over there, and we got a 24 tick target on the first one. Once that gets reached, then I'll automatically trail my remaining stop to midway between my original, my entry and my original stop loss distance. In this case, it was 24 ticks. So I'll trail that to 12 ticks. So now at this stage, obviously I only got one contract left. So Then once price reaches the level, and doesn't necessarily have to fill it, but I just work on levels. In this case, my trade management level, which is 1.5 times 24, 36 ticks. I probably would have been filled here. I then manually trail my stop to break even plus a couple of ticks in my favor. And at this stage, once that candle closes, will I start trailing my stop manually. The reason why I do this and not just go to break even after price hit at 24 ticks is just because I want to give the market as much space as possible to move around in. And also obviously have that opportunity when you do get a runner that you can also stay with that strong trend for as long as possible. All right, so this is why I don't trail my stop too soon. And I've also done this on a lot of the other trade on demand videos I've done with the other products as well. So in any case, now at this stage, your price reached the trade management level. We still have one contract on the table. Price, my stop loss in the remaining position, 2 ticks or 1 tick above the entry level. And what I'll want to do then is wait for candles to close above previous candles, not make wicks above previous candles. I explain what I mean by that now. But here we have this candle that hit that trade management level, close above a previous high. And what I'll do then, let's trail my stop 1 tick. So once it hits trade management level, I get quite aggressive with trailing my stop. Because again, I'm sort of scalping here, right? So don't want to give too much back and also want to give a market at the same time enough space to move in without getting stopped. So now we have a candle, actually 1, 2, 3 of them that stayed within the confines of this candle's body. So I won't trail my stop. It's only on this candle here where we have a breakout above this level, these previous candles where price closed above that area, where I will trail my stop a couple of ticks lower again, and so forth and so forth. Here we have another one to the upside. Closes above the previous candle's high, 2 ticks below. And at that stage, we hit the 3.1. So on one contract, you would have made $24. And on the second contract was at 72 ticks, at $720 on the second one. Again, this is just an example here of how I do the trade management. Some guys might prefer to actually trail a little bit later and maybe move the third target, or sorry, the second target a bit further away. But I quite found that, you know, we get this nice little moves, I'm in, I'm out, I've been trailing. And quite often when you see all of these conditions fall into place by looking at the volume delta histogram, smart volume, as well as the volume spread scalper signals that's getting generated, that you at least get a nice move in most cases towards where your first target is. So I want to take one off at distance 1-to-1 between my entry and a distance of where I put my stop loss, just so that my remaining contract, if price in reverse below or against me, that I'm at least be profitable. Because remember, when it hits at first target, I'll trail my stop to midway between where it was already, you know, between from a distance from my entry to my stop loss. So midway, half it. So then the market can do what it wants to, and even if it comes against my position, I'll still walk away with a profit. All right, so that's pretty much the sum up of the volume spread scalper. Again, volume can take a little bit of time to get used to. Like I said, if you make serious study of volume and looking for specific conditions to appear during certain setups, like this one being, i.e. corrective in nature with a reversal back to the upside, then I'll look at exactly, is, you know, volume deteriorating into an area? Is it picking up on the volume delta? Are we seeing a lot of potential buyers stepping in from smart volume? Again, we can't really say what smart volume is doing, but quite often when you see these spikes, it means that either reversal is going to take place. And that's normally when they either load onto positions or dropping out of positions. All right, so that's pretty much it from the volume spread scalper side of things. And the last thing I wanted to show you was, where is this? This new feature we also built in top here. So once you're in a position, we've built in what we call the position volume profile. You've got 3 buttons on the top here: start, a stop, and a reset. Now, when you hit start, you see this green line appears. All right, it takes a few seconds, and then you're going to start getting these lines appear, horizontal lines on the right-hand side margin of your chart. And basically what that is you can, I don't know if you can see that properly here, is a volume profile that's starting to build from the time that you activate it on this candle, for example, right? And for the duration of, let's say, while you're in a trade. Now, I found this works extremely well, for example, if I'm in 1 minute or trading a 1 minute time frame. So you can basically also use that. I want to say, look at where your point of control is. And if you don't know what a point of control is, normally the area from an area that you started your volume profile to where the price currently is, where most of the volume is being traded. So there's value areas on the volume profile. Is also your point of control. And quite often you'll see prices move back into an area of point of control, but sometimes they, they respect them and act as support or resistance. And you can then also decide to potentially trail your stop below a point of control. Let's say if you want to trade up, or above a point of control if you want to trade lower. So it's just another cool feature that we built in there. Like I said, I personally like manually using the same sort of trade management where trade 2 contracts, take one off, reduce my risk on second contract, have a trade management level, aggressively trail my stop, etc., etc. But just again, the position volume profile is just a really, really cool tool to also have if you want to manage your position using volume as well. And then you can just go to stop and it will stop plotting. And if you want to hit reset there, it goes away. All right. That's pretty much it, guys. A lot of talking here from my side, but I had to go through all of these cool indicators. Again, we've recently done a major upgrade to it. We've also got those 4 on-demand videos that's available in the members area where I trade the VSS live, and where I constantly go over these trade management or what I'm looking for in various sort of reversals or trend continuation setups or whatever the case might be. And obviously, I managed to catch those and then also show you, very importantly, the risk management aspect of things, how I manage trades, etc., etc. Right. Now I'm thirsty.
Very cool. Thank you so much, Richard. And, I'm glad that you were able to get into that as far as your risk management process. I'm really glad you were able to show that, share it with us. Out of everybody that I've talked to and met over the last 5 years, the biggest impression that has been left on me in terms of risk management and all that, it's you're the man. So very grateful to you for showing us that. Very cool. It looks like Joseph says, I'm using it right now and enjoying it very much. That's excellent,
Fantastic,
Joseph. Very glad to
Good
hear.
stuff.
So yeah, check your members area for some of those videos. Richard mentioned, if you haven't seen those already, I don't know how recently those were added, Richard, but good stuff.
They should be there. I'll go double check with Carl in a while, but they should be there.
Okay.
I know
If
they
those
do.
aren't there yet, they will be soon.
Yeah.
Fantastic. Well, guys, we do like to leave a little room for you to steer us in the Q&A if you have any questions. If there's anything Richard showed you in the analysis today, our levels to lock, or this volume spread scalper tool, we are happy to hang out for a minute and chat with you. You will notice I did drop our link in the chat there. So that's the link I referenced earlier in the session. That would knock about $400 off the sticker price of the volume spread scalper. So if you go onto our website, into the storefront, you will see it's listed for $897. This link will take you to our exclusive order form that will knock off those $400, bringing the total to $497. So if you have any questions about that, please feel free to fire away in the chat here. If not, if you want to get in touch later on, please feel free to reach out to us either via phone or email. You can just head to ninjacators.com. That phone number is plastered all over the website. So definitely want to encourage you to use that. Reach out to us. We're here for you. We're here to support you. I encourage you to use that link as well. So, Richard, I don't know if there's anything else we want to head off before tomorrow's session. Guys, I will not be here for tomorrow's session, but Richard will be taking the reins, and our guest, Tony Edwards of Trader Smarts, will be back with another new trade setup. So I don't know if there's anything you need to cover off as a heads up before that session, but I'll give you the opportunity.
No, not really. I mean, the markets are pretty weak at the moment, in my opinion. I mean, it's been a pretty hectic start to the week. We're only midway through it. yeah, just be careful when you do trade, guys. Always trade with a plan, obviously. Risk is very, very important. Easy to get into a trade from some signal or whatever the case might be, but know beforehand where you want to place your targets, stop loss. Now you want to manage it. And again, yeah, risk is for me probably the number one factor in trading. Obviously, many people say that, but quite a few people actually know how to actually do it properly. But obviously, we all have to learn some stage, right? Yeah, so well, I'll be back tomorrow again if there's no more questions. Yeah, like Nathan said, he won't be here tomorrow, so I'll be with you guys. And we also have Tony coming back again. I don't know if you guys been here when he was here. I know a lot of you guys were, but some of the new ones not. But you'll be going over, I think, the last two setups with his strategy, Nathan.
Yeah, I believe
So
he
I'm
has
looking
two
forward to
more
that as
setups
well.
for us. Yeah.
Yeah,
So
there
depending
we
on how
go.
long, he may only get through one tomorrow, just so we don't cram it in there too tight. But if
All
he
right.
has time, and if
Yeah,
not, we'll bring him back for another session to get that last setup.
take it as it comes.
If you recall, I believe there was a total of 7 setups that he was going to share with us. All, of course, linking back to his trade planner. And so he'll have more info, and his trial will
Yeah.
still be available to you for that. So Joseph says, thanks for the weekly webinars. They are extremely helpful. Thank you, Joseph, for spending your
Thanks,
time with
Joseph.
us.
You're
Absolutely.
welcome, buddy.
That's very great to hear. Yeah, please feel free to reach out with any feedback. Like I mentioned before, we do, as I mentioned at the beginning of the session, plan to be rolling out a newsletter for our levels to lock to accompany these sessions. So really excited about that. Once we have our newsletter together, we really believe these sessions will really be propelled and really take off. So I'm cherishing these sessions where it's our small, tight-knit group, and I hope to see you guys well into the future. Won't forget you guys, our tight-knit crew here, no matter how many people end up
Awesome.
joining us for these sessions. But it looks like we don't have any more questions, so we'll go ahead and wrap up today's session.
Yep.
I'll just harp on that link that's there in the chat one more time. If you are interested in that volume spread scalper, be sure to hang on to that. Do not go into the storefront and buy it. This link is the way to go. It'll save you $400 on that sticker price. So as mentioned, yeah, feel free to reach out if anything comes up before we see you again. Richard will be back tomorrow with our guest Tony Edwards of Trader Smarts. He'll
That's
have
right.
levels to lock for you, and then Tony will have that new trade set up. And from there, yeah, we'll just go into the weekend. Hope everyone has a really nice weekend, and we will all reconvene together on Monday, of course. So these sessions, if you're new to this, I'll just mention Monday, Wednesday, and Thursday at noon Eastern time. Every week, we are going live. So thank you, everybody, for joining us for Profits at Noon today. Richard, we'll see you tomorrow, and I will see you guys next week.
Thanks,
I
Nathan.
hope you have an excellent weekend, and I'll see you again soon. Parting wisdom, if we don't have a plan, we are planning to fail. So thanks, guys. Bye,
Awesome.
Richard. Bye,
Thanks,
everybody.
everyone. Take care. See you tomorrow. Cheers for now. Bye.